Hello back for another video on the stock markets. There is quite a bit of attention at the time for some major large and mega cap stock indices breaking all-time highs, and common interpretations are that sentiment for stocks is good and that these stock markets are doing very well. Yet when you zoom out and move away from these simple indices that are heavily dominated by a few stocks that happen to be up, you see there is actually more downward than upward movement. In this video, I show this with the 75 stocks that together compose the Amsterdam large cap, mid cap and small cap indices, with each index being represented by 25 stocks. My name is Jimmy Lapping. I'm a psychologist and statistician with an interest in a wide variety of research topics, including the financial markets. And in this video, I take you on this journey of zooming out and moving away from these major stock indices using the Amsterdam stock market as an example. So here you see the dividend adjusted trajectories of the percentage of difference 2024 year to date at the end of each trading day relative to day zero, which was the end of 2023. And the horizontal dashed line in this chart is at zero, which means neither gain nor loss year to date. And here you see the same chart with the first, second and third quartile to provide some reference values for this year thus far. You see that Q2 or the median is rather flat and actually slightly negative on the year, which means that more than half of the stocks in the Amsterdam index are actually down on the year, even after adjusting for dividend, because that's what this chart shows. This is interesting because the Dutch large cap index, for example, has been one of the better performing indices in Europe. But well, that index is heavily influenced by a few stocks that have been doing well. Here you see the 5 stocks that have been performing best year to date, which happen to be 5 technology companies, 3 of which, by the way, are semiconductors in the Dutch large cap index. And well, on top we find ASML, which has a weight of, yes, around 20% in the Dutch large cap index, even though there are 25 companies in that index. So while if you started the year with a solid long position in semiconductors, well, at least on that part of your portfolio, you have seen good gains. However, if you have been invested in some of these stocks, you may have seen at least part of your portfolio go down to quite some extent. Now, let's have a look at some specific sectors in the Amsterdam indices, starting with energy stocks. Energy stocks, at least in the Amsterdam index, are rather flat on the year and actually slightly down. Financials, 2 insurance companies, NN Group and Aegon, are slightly up on the year, the rest down on the year. Next, healthcare. Whether you have seen gains in your healthcare stocks really depends on what you have been invested in. Philips investors, for instance, are down considerably on the year, while the small caps, Vivorion and Farming, have been doing well year to date. Next one, food delivery. This is just actually one company, because this is just e-takeaway. There's only one food delivery company in the Dutch mid-cap index. It used to be a large cap. It's now in the mid-cap index. Heavily punished in previous years and remains one of the more volatile stocks of the Amsterdam listed stocks, but this one is up year to date by a bit over 5%. And finally, real estate. Here we see 2 clusters. So on the one hand, NSI, CTP and Vastnet slightly up on the year, but Eurocommercial Properties, Wereldhave and Warehouses, De Pauw, considerably down on the year. And we could go on with other sectors, but at this point it is clear that it's not so much the stock markets that are up, but that when taking a broader perspective, including large, mid and small caps, it becomes clear that despite some major large cap indices being up considerably on the year, all in all, the picture is quite mixed and there is quite a bit of downward momentum as well. Now let's take a slightly longer time perspective and look at some trajectories of individual stocks over the past 200 trading days, which is just under 9 months since early May last year. And I will briefly discuss 21 of the 75 stocks that are listed on the large, mid and small cap indices in Amsterdam, because they have some interesting patterns. Starting with a couple of examples from the consumer staples or more defensive component of the consumer sector. Here we see Ahold Delhaize, supermarket giant that can perform relatively well when defensive stocks do well, but over the past months it has come down considerably, and it is too early to say whether a bottom has been found or we have further room to go down. Next, Heineken, beer and other drinks. So this one has already had somewhat of a recovery from a bottom that was established a few months ago, and it seems we are now in a pattern of higher highs and higher lows, and hence an uptrend. Next, financials. From this sector, I have prepared Allfunds Group, asset management company in the mid-cap index, because this one had a nice recovery from the bottom established a few months ago and recently arrived at its peak seen in the first part of this time window. It has moved down from there for a bit, but since we are still in a trajectory of higher highs and higher lows, let's see if this one is going to retest that recent high again sometime soon. Then steel, for which I take both stocks in the industry listed on the Amsterdam Stock Exchange. I will start with the smaller one, Aperam, mid-cap stock. Had a good recovery from lows about halfway the time window, came down a bit but seems to have defined a higher low, and a retest of the recent high is now likely. Next, ArcelorMittal, large cap steel stock, and nearly 13 years ago, Aperam, the one that I just showed, originated as a kind of spin-off from this large cap stock. So this one has been testing an area around 26 repeatedly, and it is possible that we will now see a breakout above that level. And of course, I have to include at least one semiconductor in my overview, of which, as I already said, there are 3 in the Dutch large cap index. And today I focus on ASML, which last year lagged behind the other 2 a bit. But this year it is leading. And how? This is an almost parabolic move up. And interestingly, after it reached its previous all-time high at 777, yes, that's 777, late 2021, so just over 2 years ago, a few bears predicted nightmare scenarios in which this stock would go down to 200 or even 100 euros. And while one of the people that I followed at the time even recommended other people on his Twitter feed that one should never buy this stock again, because it would never reach that all-time high of 777 again. That number was written in the stars and would never be seen again. Well, not only did it pass 777, it is currently at 876, which is nearly 13% higher than the all-time high, which was established a bit over 2 years ago. And one wonders how long this move up can continue. But for now, the momentum still seems in favor. Next, consumer discretionary, sometimes also referred to as consumer cyclical, because it is the slightly more cyclical component of the consumer sector. Starting with Basic Fit, mid-cap fitness company, came down quite hard. Yet here we may have early signs of an attempt of establishing a bottom. Next, Just Eat Takeaway remains one of the more volatile stocks, as I already mentioned, on the Amsterdam Stock Exchange. Within percentage terms, considerable swings up and down. And here one may wonder if what we are seeing here is somewhat of an inverted head and shoulder pattern, which would be in line with that dashed line trend. And in that case, if so, we might at some point see a retest in the 16 to 18 area. Next, industrials, of which I have taken 4 examples for this video, starting with Exor. Okay, this is actually a stock that some people may place in the consumer discretionary sector because it is, among others, active in luxury goods, but it is also active in the farm and heavy construction machinery sector, and that resonates much more with the industrials sector. In any case, pattern of higher highs and higher lows remains intact, and if the current momentum continues, this one is set to continue moving higher. Next, InPost. Friday, some folks were saying, whoa, it's down a couple of percent on the day. But well, when you look at this picture, you see a clear continued pattern of higher highs and higher lows, and hence it may well move higher. Relx, or Reed Elsevier, another example of a very convincing uptrend, unless something unexpected happens, we might actually see a continuation of this uptrend. Same holds for Wolters Kluwer, which also had a nice run up and is not yet showing signs of losing steam. Then real estate. For real estate, I take 2 examples from the Dutch small cap index, starting with NSI, which had a nice recovery from the bottom established a few months ago, and at least for now remains in a higher highs and higher lows trajectory. Next, Wereldhave. We see a negative trend, and we are back at a relative low for about the 4th time in this time window. Let's see if it can turn around here. Another group, energy and transition. I call this group energy and energy transition, starting with OCI, which is traditionally not an energy but a basic materials stock. Yet its activities are increasingly linked with the energy transition theme. After a very good 2022, it had a rather horrible 2023, but since the end of December, we have seen a strong move up and the momentum seems in favor to continue going higher. Wednesday shall be interesting for this one, because then we will get a trading update from the company, which will most probably give several important strategic updates, including around recent sales of activities, as well as the outlook and plans regarding the activities that are left. Next, SBM Offshore has been underperforming for quite a while already, seemed to have established a bottom, but we saw a renewed downward movement lately, followed by a slight move up. Let's see if this one can turn the trend from here. Well, as we've already seen, not all that is energy is doing well, and here we have a good example of that in Vopak, another mid-cap energy stock. Very clear downtrend with no signs of that ending yet. Next, 2 healthcare stocks from the Dutch small cap index, starting with farming, which continues to be a volatile stock. Here, with levels all the way from around €1 to around €30. Yes, that's quite a range. It continues to basically bounce up and down in this rather wide range. Then Vivorion. had an impressive run up, almost to up to almost 20 per share sometime first half last year, but then came down very hard. And now it seems to slowly move up from a lower range we have been seeing for a while. And finally, I will show two stocks from the communication services sector. Starting with Prosus, which continues to depend quite heavily on announcements from the Chinese government, which have implications then for companies that Prosus is invested in. It seems for now that currently the bottom is around 26, and if the current momentum continues, we will probably see a retest in the 31 to 32 area soon. And finally, Universal Music Group. When this one entered the Dutch large cap index a couple of years ago, some wondered what on earth that stock was going to do there. But it is currently higher than where it was when it entered the Dutch large cap index. And while the last 9 months have seen a fairly clear uptrend. Okay, that's it for this video, which is this time is a little bit longer than usual. I hope you find it useful. And if you have any ideas or suggestions for future videos, you can leave a comment below this video or just drop an email using the email address that I have shared in the description below this video. Thank you for listening. Have a good day and see you soon.